Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we're going to be talking a little bit about a step-by-step approach that you can start implementing today to sort of help you with your directional bias within a day, right? If you start implementing the ideas that I'm going to be presenting you here, you should have no confusion and conflicting thoughts whenever you're trying to decide whether you want to be a buyer or a seller within a particular trading market, right? So that's what we're going to be doing today here. So if this sounds like something you want to learn today, make sure you stick through the entire video because I'm going to be trying my best to provide you with as much information and value as possible. So make sure you stick through the entire video. Now, with all that being said, let's actually get started discussing directional bias with a step-by-step approach. So traders, we're on the drawing board as we usually do in this channel, and we're going to get started with the topic of discussion, which is essentially directional bias. So let me take a second, let me write it on top over here, and this is absolutely related to top-down analysis, sort of higher time frame to lower time frame approach, right? So when we talk about directional bias, the very first thing that you need to understand is you need to be able to sort of differentiate between, we have retracement legs, and expansion legs, right? You need to be able to understand which is which and what is essentially happening with those ideas over here. So I'm not going to be getting into too much detail about these topics over here because they're pretty self-explanatory over here, right? So we understand that within directional bias we have retracement legs and expansion legs. So what you want to be doing is deciding on a particular time frame, right? Whether you use the 1 minute over here, whether you use the 15 minutes to determine that, the 1 hour, the daily, that is completely up to you as a trader, right? You should be sort of keeping the high time frame narrative in mind, but at the end of the day, you're going to need to decide on a particular time frame to determine your expansion leg, and this is going to make sense in a bit, and your retracement leg, right? So let's say you as a trader actually decide that, hey, I'm going to be choosing a 2-hour time frame, right? Sort of a intraday approach. So let's say that we decide to use a 2-hour time frame over here. Great. So let me actually remove all this stuff. Make sure you wrote whatever you need down in regards to these ideas over here, because I'm going to be getting rid of this right now. So we understand that we have decided on a 2-hour time frame, and let's say you open Euro USD or whatever pair it may be, and this is sort of what your 2-hour time frame looks like, right? You have something like this unfold. So we have to understand and draw the line between retracement legs and expansion legs, right? If we look at the story over here, you should be able and you should understand, and this is where putting everything together actually makes sense and is essential to your trading, is we had consolidation over here. We took that liquidity below that out with this move over here. We then took this liquidity on top over here, right on top of the consolidation. We pretty much manipulated both ends of the range, and we provided a break to the downside right at this point over here. So this is your first step. You have to identify the most recent break, because that is going to allow you to draw the line between retracement legs and expansion legs, right? So we look over here. Now we understand that this is our most recent break over here. So this is now considered your expansion leg, because this is expanding the range to the downside as we actually made a new low and broke structure to the left. So this is considered your expansion leg. Let me actually highlight that. This entire move down, more often than not, you want to be, it needs to be pretty aggressive, right? You want to see big bearish candles coming down with a lot of volume and all that sort of stuff, right? So this is now considered your expansion leg over here, and this now becomes your retracement leg. because this actually retraced, grabbed that liquidity, and now we understand that the interest in this market is most likely to be continuing down. And essentially, that is what you want to be doing to determine your directional bias, right? You want to be monitoring the most recent break, and now you have a bias. You can say to yourself, hey, I want to be a seller in this market. Nevertheless, you don't want to be selling as a new low is made, right? Because you should understand that with probability, what is going to happen next is that we're going to be getting a retracement leg back up into whatever area it may be to then continue lower, right? And you want to be sort of trading the expansions lower because you are in a seller sort of with a sell bias. So you want to be waiting for those retracements to finish to then continue lower, right? So that is a pretty phenomenal and easy way to determine your bias. Once again, let me go over it once again, right? So you have to sort of understand retracement legs and understand expansions leg. You want to be waiting for a break that would then signify that you have an expansion leg building, and as a new low is made, just in this case over here, you don't want to be taking a sell just because you're sell bias. You want to be waiting for that retracement to unfold into whatever area you may use to look for sales, whether that is an order block, a breaker block, that is completely up to you, and sort of then trading the expansions back lower. The essential rule and key here is that you understand the higher time frame narrative, and that with that in mind, you identify your most recent break. Whether you use it, once again, the 2 hour, the 1 minute, doesn't really matter. The market is fractal and it will allow you the same trades and patterns on each and every single time frame, right? So understand that. And to give you more ideas around that topic, guys, if you are expecting or sort of anticipating a retracement leg, you want to be seeing weak and sort of, yeah, pretty much weak bullish in this case because the retracement leg is going up. So weak bullish price action. You don't want to be seeing the same volume coming down, coming up as it was coming down. You want to be seeing weaker price action. You want to be seeing how it's taking its time to retrace, because once again, the interest is not to put money into buys for the market, but rather complete that retracement into the sales that then should continue with the expansion and aggressive moves lower. So you want to be sort of keeping track of that characteristic in order for you to successfully identify if that is indeed a retracement leg or not, right? So aggressive move down, weak bullish price action retracing into discounted areas, whatever it may be, to then look for confirmations, whatever you may use to continue lower, right? So I really do hope this made some sense for you guys, and we're going to be jumping right back into the charts so that we can go over a couple of examples and maybe clarify some of the doubts or whatever it may be that you have at this point. But this should be pretty straightforward. You want to be keeping the higher time frame narrative in mind, and you want to be choosing on a particular time frame to identify your most recent break. Once you've done that, you have a directional bias for the day. And as you can see, it's pretty simple and not difficult at all. So we're going to be going back into the charts and we're going to be discussing that idea and showcasing some examples. Okay, traders, we're back on the charts, and what we're going to be doing now is fairly simple. We're just going to be implementing the ideas that I've just explained to you a second ago so that you can see how that would look if you actually want to implement those, right? So we're looking at GBP JPY, 30-minute time frame. Let's say that you decide that, hey, I want to determine my directional bias and my most recent break based on a 30-minute time frame because I like to be in and out of the market rather quickly, so I'm going to be doing that. Okay, now this is what you see. You can see pretty messy, pretty sort of not good to trade. But let's say that you say to yourself, hey, we see this price action develop, and I understand that as we break this low over here, this would then set my directional bias for the day. But important, you need to understand that I'm not keeping the higher time frame narrative in mind, which is something that you should be doing because I'm just focusing on explaining you the difference between expansions and retracement legs, right? So understand that you still want to be keeping the high time frame narrative in mind. But nevertheless, let's actually focus on this. You understand that as we trade below this low, if we have a leg down that sort of looks like an expansion because of its nature, right? It's aggressively pushing down. If we then get weak bullish price action coming up, I can then safely say that my directional bias is sells, because we're looking at this structure over here, right? We would have a lower high, a lower low, and you're expecting that lower high anywhere in these areas over here to then continue lower, because you want to be understanding the difference between expansions and retracement legs, right? So let's play this price action out over here. So as you can see, guys, pretty aggressively move down. You have a break to the downside over here, right? You can even go ahead and denote that with whatever you want to use, and you understand that this is your most recent break, so you have a sell sort of bearish bias for the day. Now, as we said before, you don't want to be selling over here at the lows, right? You want to be waiting for that retracement leg to build. You want to be patiently waiting for that, and you want to sort of see how it is a weak bullish price action coming up, so that you can safely say that, hey, this move up is nothing but a retracement to allow smart money to get into more sell positions, probably anywhere in this area over here, to then continue selling, because smart money is telling me that the most recent break occurred over here, and I can see the aggressive move down developing, right? So we understand that, and let's actually keep replaying price action over here. So price keeps extending the leg, and now we're retracing, right? You can see how price it's taking its time with the retracement. It's not as aggressive as the expansion leg coming down, right? So we understand that. Let's keep track of price over here. Let's see what we get. Let's actually speed this up a little. And as you can see, price takes its time. You can anticipate that that retracement leg is currently occurring, and now you're hunting those sells, because your bias is sells, and you want to be seeing those sells occurs, right? Reason being, once again, is because we have a break over here, right? This is your most recent break, and you can see the expansion of the range occurring to the downside. So you understand that as price is moving up, it is very likely to be a retracement leg, especially due to the nature that you're being shown over here with the amount of candles it is taking for price to actually move up, right? You don't see a lot of volume, you don't see a lot of that being introduced as price is moving higher, right? So now, whether you want to be using an order block over here and using a risk entry, whether you want to be doing something else, that is completely up to you. But once again, I do hope that this video made some sense over here. Let's keep replaying price. Price sort of does a little bit of that. Essentially, at this point, you should be pretty much thinking that this can be your lower high, and you want to be seeing that new lower low unfold, right? So that is pretty much all there is to this video, guys. As we said, the main takeaways is that you want to be understanding expansion legs, right? Expansion leg, retracement leg. You want to be sort of understanding what is what. You want to keep your high time frame narrative in mind, and you want to be sort of deciding on a particular time frame, and you really need to be doing this, guys. You want to be deciding on a particular time frame to determine most recent break. So that is sort of what you want to be doing when trying to establish your directional bias within a particular trading day. So guys, that is going to be it for this video. Remember that you don't have to implement every single concept and idea that I teach on this channel. You should do your own due diligence, right? You should take the time to actually backtest those ideas, live test, whatever you want to be doing with it, but you want to make sure you're comfortable with what you're doing, because if you're not comfortable, you will never be profitable. I can guarantee you that. Whenever you're executing a position, you need to be 100% comfortable with what you're doing, regardless if it wins or it loses, right? Everyone has wins and losses, so there's no big deal with that. What the important thing is that you're comfortable with what you're doing, and you're sort of managing your risk, right? So, with all that being said, guys, just going to quickly remind you that the mentorship is still open. You can have access over here, and I wanted to sort of say that there is countless of Telegram usernames pretending to be me, creating fake groups and all of that. So please do not fall for that once again, and sort of do your own analysis when trying to identify certain things. So with that being said, guys, I wish you all good and profitable trading. Wish you all a great weekend, and I will see you guys very soon.